What if one of the most important numbers in a real estate decision isn't the purchase price or the interest rate, but the amount that quietly shows up on a property tax bill every single year? In many markets, property taxes are treated as a secondary consideration, something buyers glance at rather than fully analyze. But over time, taxes can have a significant impact on the true cost of owning a home, often shaping long-term affordability more than people initially expect. In Jacksonville in 2026, this conversation is becoming more relevant as property tax bills continue to rise, even while the city maintains a relatively competitive position compared to many other regions across the state and country. To understand what is happening, it is important to separate two closely related but distinct concepts: tax rates and tax bills. Property tax rates in Florida are influenced by millage rates set by local governments, while tax bills are determined by the assessed value of a property combined with those rates. Over the past several years, home values across Jacksonville have increased significantly, and even as price growth begins to stabilize in certain areas, those previous gains are still working their way through the assessment process. This creates a situation where homeowners may see higher tax bills even if market conditions are no longer accelerating at the same pace. Assessments tend to lag behind real-time changes in the housing market, meaning tax rolls are often catching up to prior appreciation rather than reflecting current trends. This dynamic can feel counterintuitive, especially for homeowners who hear about cooling price growth but continue to receive higher tax statements. Yet it is a normal part of how property taxation functions. Despite these increases, Jacksonville remains relatively affordable when viewed through a broader lens. Florida as a whole consistently ranks below the national average in effective property tax rates, and within the state, areas like Duval County remain competitive compared to higher tax regions across the country. This creates a unique dynamic in the local market. For existing homeowners, rising tax bills can feel like a growing expense that impacts monthly budgeting and long-term planning. For relocation buyers, however, Jacksonville often still represents a financial advantage. Individuals moving from states in the Northeast or Midwest frequently come from environments where annual property tax obligations are significantly higher. Even with recent increases, Jacksonville's overall tax burden can still be lower than what many incoming buyers are accustomed to paying. This difference becomes especially meaningful over time. Property taxes are not a one-time cost. They are recurring expenses that accumulate year after year. Over the course of a decade or more, even modest differences in tax rates can translate into substantial financial impact. As affordability conversations evolve, more buyers are beginning to factor in total cost of ownership rather than focusing solely on purchase price. Taxes, insurance, and ongoing expenses are becoming part of a more comprehensive evaluation of what it truly means to own a home in a particular market. Jacksonville's position within that equation remains relatively strong, even as tax bills trend upward.
Population growth adds another layer to the property tax conversation. As Jacksonville continues to attract new residents, demand for public services increases. Schools require funding, roads need expansion and maintenance, public safety systems must scale, and infrastructure projects must keep pace with development. Property taxes serve as one of the primary mechanisms through which local governments generate revenue to support these services. As the population expands, it is natural to see upward pressure on total tax collections. However, growth can also provide a balancing effect. A larger population means a broader tax base, which can distribute the burden across more households and businesses. When managed effectively, this can help maintain relatively stable tax rates, even as overall revenue increases. Jacksonville benefits from this dynamic because it is not dealing with a shrinking or stagnant population. Instead, it is adding new residents who contribute to the tax base, supporting the city's ability to fund services without relying entirely on increasing rates for existing homeowners. Another important factor shaping property taxes in Florida is the presence of structural protections for primary residences. The state's homestead exemption and assessment caps limit how much the taxable value of a homesteaded property can increase each year. For long-term homeowners, this can create a significant gap between a property's market value and its taxable value. Over time, this gap can reduce the effective tax burden for those who have owned their homes for extended periods. This is why two similar properties in the same neighborhood can have very different tax bills. A homeowner who purchased years ago may be benefiting from capped increases, while a newer buyer may be taxed closer to the current market value of the property. For buyers entering the market in 2026, this distinction is critical. The property tax amount listed on a home may not accurately reflect what they will pay after purchasing it. Once a property changes ownership, it is typically reassessed based on the new purchase price, which can result in a higher tax bill than what the previous owner experienced. This creates a need for greater awareness and education within the real estate process. Buyers must look beyond the current tax figure and understand how reassessment will affect their future costs. Sellers should recognize that rising taxes may influence buyer affordability and purchasing decisions. Real estate professionals play an important role in helping clients navigate these nuances, ensuring that expectations align with reality. Beyond individual transactions, Jacksonville's overall tax environment contributes to its broader appeal as a relocation destination. The city offers a combination of relatively moderate property taxes, no state income tax, and home prices that remain competitive compared to many major metropolitan areas. This combination creates a compelling value proposition for individuals and families evaluating cost of living across different regions. When buyers consider not only what they will pay for a home, but also what they will pay in taxes and other ongoing expenses, Jacksonville often compares favorably to higher cost markets. This is one of the reasons demand continues to remain strong, even as certain costs rise. Looking ahead, several factors will influence how property taxes evolve in Jacksonville. Continued population growth is likely to sustain demand for public services, which may place ongoing pressure on tax collections. Changes in property values will continue to affect assessments, particularly if the market experiences further appreciation over time. Local government decisions regarding millage rates will also play a role, as adjustments to these rates can directly impact tax bills. In addition, insurance costs remain a significant consideration in Florida, and when combined with property taxes, they form a substantial portion of the total cost of homeownership. This highlights an important point. Property taxes do not exist in isolation. They are part of a larger financial picture that includes insurance, maintenance, and other recurring expenses. For homeowners, managing these costs requires awareness and planning. Understanding how a property is assessed, knowing which exemptions apply, and staying informed about local tax policies can help individuals make more informed decisions. For buyers, the key is perspective. While it is true that property tax bills in Jacksonville are increasing, it is equally true that the market remains competitive relative to many other regions. Evaluating taxes as part of a comprehensive budget, rather than focusing solely on purchase price, allows for a more accurate assessment of affordability. Investors also benefit from this balanced environment. Markets that offer growth potential without excessively high tax burdens tend to remain attractive over the long term. Jacksonville's combination of rising property values and moderate tax rates creates conditions that can support both appreciation and sustainability. Ultimately, the story of property taxes in Jacksonville in 2026 is one of balance. Yes, tax bills are rising, reflecting the impact of past appreciation and ongoing growth. At the same time, the city continues to offer a relatively favorable tax environment compared to many parts of the country. This balance is a key reason why Jacksonville remains an appealing destination for both homeowners and incoming buyers. Affordability is not defined by a single number. It is shaped by the total cost of ownership over time. And when viewed through that lens, Jacksonville continues to hold its position as a market where long-term value remains within reach. I'm Luke Christmas, and it's always Christmas when you work with Christmas Homes.